So the word on the street when it comes to real estate has been how much the interest rates have increased since the beginning of this year. We're seeing it now in all the transactions we've worked on, whether it's with buyers, but also with sellers. At the beginning of this year, it was typical, as it had been for over the last year prior, that buyers were typically getting home loans anywhere from 2.75% to 3.25% for their new home loan purchase. This, coupled with the shortage of available homes to buy, are the two main reasons why home values have increased anywhere from 15 to 20% in each of the last 2 years in Southern California. Well, this low interest rate environment started to cause significant inflation wherever you went. Whether you're buying cereal and milk or sheets of plywood, we've all experienced sticker shock in how much more expensive these things have become. So the government, specifically the Federal Reserve, have taken action and have increased the lending rate to stifle this inflation to help the everyday American household. But that has, in turn, strongly affected home buyers' purchasing power. Many people have told me, well, back in my day, when I bought my first home in the 1980s, the interest rate was 14%, so I don't really know why people are crying about 5 and 6% interest rates right now. While that may be true, it doesn't necessarily change the reality that buyers' purchasing power has been significantly reduced. Let's break this down into numbers. For instance, an FHA home loan for a home of $400,000 in January of this year would have resulted in a monthly payment of $23.63 a month. That same house today, $400,000, with current interest rates to 5.5%, is $29.90 a month. That's $627 a month difference. Same can be said for a conventional buyer with 20% down. At a purchase of $600,000, getting a loan for $480,000, the monthly payment would have been $27.40 in January. That same house today is $35.05 a month. That's $765 a month, is creating pressure on buyers to either be okay with the larger payment, reduce their overall purchase price, or simply forego the purchasing process in hopes that buying a home will just become more affordable down the road. Now, I'm not here to make a market prediction because that would be a bad idea, but I do know that the interest rate increase isn't something that is going to go away in a matter of months. It is the new real estate environment we're in, and buyers and sellers need to make decisions based on that. For buyers, they will be driven to make decisions based on the monthly payment, and for sellers, they have to navigate the sale of their home, knowing what buyers are facing and how they're making decisions. The inventory of homes have increased in all markets for the last several months into what is a more standard market, so sellers will need to come back to earth when it comes to their own expectations of the sale of their home. We can dive deeper into this, but instead I would encourage you to reach out to me and we can speak about it directly. Thanks.